Hey everybody, welcome to Trendy Trading. Today is the 29th of January 2023. Just a couple more days until this monthly candle closes out. But let's go ahead and focus on the broad market analysis. We'll be looking at the dates of tonight. Futures open again 5 Central Time here in Florida. But we will be covering the 29th of January into the 3rd of February. Let's go ahead and get started. So as you guys all know, we'll be looking at earnings coming into this week, and it is a palooza. I mean, it's absolutely jam-packed. I don't need to go over the names. You could see already on Thursday, Amazon, Apple, Alphabet. I mean, just right there. That is like Christmas. I can't help but to smile because I think this week will probably be pretty wild. Just a lot of names on here that I'm super excited about, super pumped about trading. And yeah, so again, it's like Christmas for me. So I'm really excited. Next thing we're going to be looking at is the market watch. So again, I just kind of underline really quickly to show you guys, what may cause a little bit of volatility in the markets. ADP here on Wednesday. There was nothing on Monday, by the way, nothing scheduled up there. Construction spending, just something that I'm interested in. And then, of course, you have Jerome, who will be in a news conference here at 2:30 p.m. Eastern Time on Wednesday. Next, we'll go into Thursday, and you can see we have initial jobless claims. They're first thing in the morning, and then non-farm payroll on Friday. So this is an interesting setup with the earnings and the fact that we have Jerome. So I think my overall sentiment will be sort of consolidation. So maybe a little exuberance tonight from Friday's move, maybe a pop and then just kind of drop and kind of go sideways, and then we'll talk about the targets and so forth and what I'll be looking for as far as support going forward. Last week, SPY QQQ neutral. Remember, it was the first time this year, anyways, that we used the same blueprint as the previous week. And you can see that this blueprint works really well. What I like to look at when I focus on after the fact is just look at the wicks, look at the levels that I provided, and look how they react. So, there's your target to the upside, your target 2 to the upside, target 3. They worked really, really well on SPY. Over here on the Qs, you can also see that the neutral strategy worked really well. We came right into that little pocket of it, inside and up. We pushed past T1, T2, T3. I think even for me, I was surprised by some of the moves, but very happy with the overall results of last week. So I didn't have a target up here, but again, if you guys ever need one, you just reach out to me. And for anybody that's in the room, we're actually going over, new targets and those type of things when we're looking once we push over the targets that I have provided. Okay. The next on the list is going to be the SPY neutral strategy for this coming week. So let's go ahead and show you that. So again, the SPY strategy for neutral just means basically we're long above the green, you're trimming, raising stops into targets above. And if for some reason we were to pull back or break down below the red level, I'm looking for targets to the downside. Because my overall thought is bullish in the short term, consolidation. If for any reason we were to gap down into any line, so you have to understand that this also is a line and this is also a line. So if we were to gap down into 40216, I'm actually looking to see if buyers show up, and I'll be using my smaller time frames to get in that trade above the PMZ. If you notice, the lower neutral level is in line with some inside and up and buying pressure. So again, that's why when we gap down into levels, we're actually looking to buy because of the banners up here, and they're telling me that current conditions are bullish. These are levels. Just take a snapshot of it. You guys know how to trade that, and if you don't, it's actually on my YouTube page, how to trade the trendy neutral strategy. Okay. Next thing, let's go ahead and move down into what I feel like is the most important part of what I do on the BMA, because I notice a lot of traders get messed up, honestly, because they're not looking at the bigger picture. And so, there's a lot of bears coming into 2023, a lot of talking heads, a lot of bad information. And really, all you had to do is just pay attention to the technicals. So what we're looking at here on the QQQ is simply SPY, bigger picture. We're using a quarterly chart. And what is important here, okay, is the fact that not only did our levels work from 2022, that would be these two white lines here. This was, I believe, a monthly demand zone that was in here. And so far, this is working 2 quarters here in a row so far. So this right here says back in the bullish channel from the 2020 rally. What I did was measure from here into the pivot high, and this is your 23.6 and 38.2. We noticed this a while back. You know, the last quarter was resistance. Once we broke above that and got above the cloud, then you really want to stay bullish because, again, we're in that bullish channel. If you look up and to the left, there's a little bit of overlap here. It says quarterly supply. You can see that there's an inside and down right here. There is a potential, okay? If the market continues to the upside, this is where we're headed. So prices like to push into supply from demand zone. So again, your demand zone was here, okay? Let me go ahead and make that green so we don't confuse anybody. Your demand zone is right in here, and we came right into that. These are the same levels I've had for many, many months. And then we have our supply zone right here. So again, price likes to travel from demand to supply. It's not always up in a trajectory of straight up, obviously, and that's why we like to use several different time frames. But paying attention to the bigger picture and understanding that as long as price can hold above this 38.2 and above this cloud, I want to remain bullish. So we can short shorter time frames, but if we come down into these major levels, I want to be looking for bulls to show up. So the biggest level here and the notes that I would talk about is that we're $15 above the bull channel, which is the 38.2. And for now, this is our range, 390.25 by 424.62. I'm just taking these two levels, the 38 and 23. And support for now is the future lower trendy edge, and that's that blue level right there, okay? And as you can see, that level right there is 381.45. 381.45. That's support. Why do you need to know this lower 38.2 and this support? Just in case something weird happens. We don't know. Okay. If something weird happens and we pull back to there, this is where I'm looking to buy. All right. Let's go ahead and just again looking to buy, but I'm also paying attention to the smaller time frame. There's many different instances where our indicators are saying, hey, even though this is support, be careful. It's not time to go long yet. And again, that's that extra bit that you get here at Trendy Trading when we're coaching every morning and we're live trading with you. Okay. All right, let's go ahead and move on. We'll go into the QQQ neutral strategy. Really straightforward once again. Go ahead and take a snapshot of this. Upper levels to the upside are resistance until proven otherwise. Lower levels are support. Overall, we are weekly and monthly looking at an extreme bullish trend. Far as the year is concerned, it's not as healthy as the SPY, and that's okay. It's been lagging. We know that, but there's also a lot of opportunity out there, and we've been saying that for many weeks. And congratulations to most of you who have been, on the right side of trading, not letting news or any of that stuff kind of pollute your mind, if you will. Again, stay away from the news. We don't need it. We just trade technicals, and we'll continue to be like that for many, many years to come. Let's go ahead and move down here into QQQ, the bigger picture. All right, let's open this. Good. All right, and so again, this is the quarterly, and price hit the edge last week. I talked about the QQQ hitting that little kind of pink edge underneath there, and that was our target. You can see we hit that. Now, the biggest thing to take away from here is the fact that we're moving up into a monthly inside and down. So coincidence? I don't know. But we're coming into, again, a very big week for tech, and it just so happens that we stalled right here into supply. Be careful, a little bit of a yellow flag here, but if for some reason we can start to bid over this level, then I have targets up here to the upside. And those targets, okay, are 309.82 and 320.72. So just because you get to supply doesn't mean that price has to back down. All right. And that's where I think a lot of supply and demand traders get it twisted. They start to think they have to go short, but as if this, then that, if price can break above 299.26 and hold that level, then we're looking for a price to move into 309.82. Above here is that quarterly inside and down, and you can see that the Qs have a lot more range to trade than the SPY does. Okay. So again, this is lagging, although it's been bullish. It is lagging. Yellow flag as we approach the inside and down. And also something to take away from here is the fact that we stalled right at the cloud. And remember, folks, when we're above the cloud, we look for a nice little range, like this. We look for bullish action. Where we're coming up underneath the cloud like this, it's resistance until proven otherwise. And you can see that over the last couple quarters. So again, just a little yellow flag, and it makes sense coming into the earnings. Okay. All right. So the next thing that we want to be looking at is going to be the dollar, or the DXY. Let's go ahead and open that. So this is your dollar. Again, it's coming down into price here, into the inside and up formation. And at any time, the dollar could bounce out of here. So again, yellow flag, but we still have room for the dollar to continue to drop towards the bottom of that green flag, or sorry, that green demand zone. Okay. And again, that level's down here towards 98. So again, just a little bit of a yellow flag, just like last week. But after that, we want to look at the Treasury. So we'll open that as well. Same thing here. Not much has changed. Looking for price to come back to the 9 EMA. Yellow flag here on the Treasury. And then we have the skew. All right, big one that we use here. It's still at the risk on. This has really helped us to be long as well with everything else that I provide for you. Notice that it's went from red to white. And when it goes from red to white, the momentum is changing. And in this case, right, this is not a stock. This is your hedge funds. Basically, what I'm seeing is that momentum could continue to push the skew. And as I said last week, towards 130, 135, 140. I think if for some reason we get into this range again, your fear and greed would push us into the extreme greed. And again, this kind of tells me you have between here and here to still continue to the upside. All right. So there's still room. I'm not saying we're going to. I'm just saying if you're a bear and you're having a hard time with this rally, it still has a long ways that it could push before you see some sort of pullback. Okay. Meaningful pullback, I should say. Next thing is going to be my overall sentiment. So far, we have been on the right side of the move. And again, it's been a great month. Last week was amazing with Tesla. So if you've been with me for several months, we started adding out of the money calls back in. I want to say it was October, November timeframe. Maybe it was December, but it was months ago, and it paid off. Those reached close to 600% on, actually over 600% on Friday. So that was a really big win, and still have several contracts there. But it's been great, but I can't help to see the euphoria with the masses. Euphoria does not mean we can't reach a point of unicorns and rainbows, right? So I'm just being funny, or extreme greed. And just because we see rainbows doesn't mean we can't see the leprechaun at the end of the rainbow. That would be way down here towards the extreme greed, right? We know that the market has a tendency to really push the limits, especially if you're on the wrong side of the trade. We're not quite there, and we could see more rip to the upside. When I look at the majority of charts, I see room for consolidation. The shorter time frames are actually not extended, in my opinion, and continue to hover just above the clouds. Remember, the clouds are the support. My overall sentiment going into this next week is consolidation and to the upside. Look to buy the dips, but caution. When I say caution, I mean business as usual. Base hits, bring stops in, and trim at the targets, and maybe we'll hit a home run. I hope you guys like this broad market analysis. If you have any questions, please let me know. Future traders, I've already dropped all the charts in there for you. And once again, If you need me, you know where to find me. Have a good day.